as we set near record highs, but of course continue to digest data on the economy. I do want to bring in my next guest. He's a chief economist, Daniel Lacalle. Daniel, it's great to have you on the show today. Thank you for joining remotely, of course, as the president-elect has officially opened the equity markets here at the New York Stock Exchange. Given what is unfolding, what are your thoughts on the economy?
Well, thank you very much for inviting me. What a historic day. I think that for the economy, it's a very important period of time because the United States economy needs to grow, but it needs to grow reducing prices. And what we have just seen with PPI prices and CPI earlier is that the disinflation process has been very, very stubbornly weak, and it's not improving as everyone should expect. So a lot of deregulation, a lot of government spending cuts, and certainly increase in production and new manufacturing needs to be brought in order to bring down prices, but also strengthen the productive economy. I think that the outlook for the United States next year is that the economy can grow between 2.5% to 3% easily, but it could go to 3.5 to 3.7 if all these measures that I have been mentioning and that have been mentioned prior by President Trump will be implemented quickly. I think that what's key here is that all of those are adopted in a way that can boost the productive sector, which has been actually quite weak despite the robust level of the headline GDP.
Of course, as we were listening to the president-elect's remarks in the boardroom here at the Stock Exchange, he was talking about campaign promises and certainly reiterating avenues that he followed during his first term in office, and that includes bringing business back to the United States, as well as ramping up oil and gas production. What does that mean from an economic perspective?
It's very important. The oil and gas sector, and obviously the entire energy spectrum, which is going to be boosted by the policies implemented by the Trump administration, is key to generate the highest level of jobs that any other sector can think of. If we look at the period of 2007 to 2011, what we saw is that it was the energy sector that drove most of the improvement in the job market. And those are well-paid jobs, but more importantly, the energy sector brings a lot of activity to other sectors, to infrastructure, to housing, to real estate, obviously, and to tourism, accommodation, all of it. So I think that that is a very significant part of the policy plan. The other is bringing back all of those large companies and also medium-sized companies that actually left the United States and went with all of these different processes of moving some parts to Canada in the case of 2008 to 2011. So I think that all of those elements are very important. Bringing back investment to the United States is key. The manufacturing sector cannot be as weak as it has been in the past 2 years. So I think that all of those things can certainly boost the productive economy and therefore bring real wages back. And that is the key element of the policy. Ultimately, the biggest disappointment of the last 4 years has been that real wages have been basically stagnant. So what we need to see is real wages going up and therefore affordability also coming to a stronger environment, not just by lowering prices, but also by improving the real wage growth of American citizens.
Daniel Lacalle, thank you so much for joining. Daniel's a chief economist, of course, as the president-elect has opened the stock market here at the New York Stock Exchange.